Are the markets going to crash next week? Think about it. It's a very serious situation right now because we've just had Deutsche Bank about to go down, and that's a $1.4 trillion bank. It's actually much larger than Lehman Brothers, right? We've had Silicon Valley Bank, and then we had Credit Suisse go down. This is looking serious. So next week, could stocks and Bitcoin and crypto, are they poised for a crash? See, Lehman Brothers was only a $600 billion company, but this Deutsche Bank that's looking like it's going to go down next week is a $1.4 trillion bank. Now, see, the situation's pretty serious here, but the Federal Reserve and the Treasury are telling you lies. They're saying nothing to see here. The banking system is resilient. Well, if it is resilient, then answer me this. Why are they making these repo loans to the banks again? So the Federal Reserve is pumping money out to these banks to help them because the banks are in a lot of trouble. And they don't often do this. Do you remember the last two times banks got repo loans from the Federal Reserve? Well, once was during 2008, 2009, and we had that massive GFC crash that nearly took down the whole financial system. And another time was in late 2018, and then we all remember what happened in 2019 with the COVID crash. So two recessions and two massive crisis to the economy. And see here again, it's starting to happen again. There, see that little spike right there. See these repo loans that the Federal Reserve does to give out money to these banks doesn't happen very often. It only happens when they're in major trouble. And it's just not just the American banks, but we're seeing the Swiss banks, the Deutsche Bank, which is the largest bank in Germany, and we're seeing Barclays in the UK. Almost everybody is in trouble. So many banks in the US and in the UK and in Europe are in trouble. So what happens next week? And as if that's not enough trouble, check this out. Basically, the banks are showing even more stress because the commercial real estate market is now in trouble as well. So the banks are even in deeper trouble. What is the commercial real estate market? Well, you know, the residential real estate market is essentially when you buy a house. It's residential. Commercial is when you do it for offices or shopping centers. And a lot of those offices, as you know, are like 70% empty right now. 60% unoccupied. Why? Because after COVID, a lot of people, a lot of financial Wall Street guys like myself have basically just said, I'm moving to a beach somewhere and I'm going to be working off my yacht. I'm going to be working from home. I'm not going to be sitting in an office somewhere in New York. So those offices, those commercial real estate, their values are diving. They're in deep trouble. And guess who lent a ton of money to those offices? Yeah, you guessed it. See, 70% of the loans made to those offices don't come from the major banks, but come from the small banks. That's right. Not the big banks, which are too big to fail, but the small banks, which if they fail, the government's not really going to care as much. See, they made 70% of the loans to those small offices or those office real estate. And the office real estate in trouble, which means the banks can't get their money back. The banks are in big trouble. But do we think the market is going to crash next week or next couple of weeks? See, this is the Fed asset book, Fed asset balance sheet. And they've been doing QT, which means they've been selling bonds and getting money back into the Federal Reserve, right? And that's what's tanking and crashing the markets. But look at here. In the last 2 weeks, it's made a huge bounce. They're now up $400 billion, which kind of means they've pumped $400 billion back into the market. I understand that some people say this is not QE. This is not the same thing as QE. And I agree, technically it is not. But however, it's simple. We don't want to get too technical here. When you look at that chart, right? When it is going down, it means they're doing QT. And that's why the markets are crashing. Whenever it is going up, you can say it's not QE, but when it's going up, certainly more liquidity is being added into the financial markets or into the bank's reserves, whatever. It prevents the markets. If it doesn't make the market bounce, it at least prevents the markets from crashing. And that's why right now we're seeing the NASDAQ at a 6 to 7 month high right now. We're seeing Bitcoin at 28K, which is like a 8-month high for Bitcoin. So overall, even though the situation is very dire for the banking sector, I think the Fed is putting enough liquidity out there in the markets. Maybe we could have one more small bounce before the big recession and the big crash comes in the second half of this year. Oh, and by the way, they're really trying to ban this platform. They're really trying to ban TikTok. So follow me on the other platforms by clicking on my bio and my Stan link. and see me in Discord, Instagram, Twitter, YouTube. Follow me in all the other platforms.